Welcome, everyone. We are pleased that you have joined us for today's webinar titled Starting the Buy-Sell Conversation. The webinar will last approximately 15 minutes, and at the end, you will be given an opportunity to receive supporting materials by email. You will also be told how you may email questions related to today's content to the presenter. Today's presenter is Jennifer Lawler. Jennifer joined the Advanced Underwriting team in October 2014. Before joining the team, she spent 6 years working for a tax and estate planning group. While there, she worked extensively on tax return prep, estate planning, and assisting clients with their tax needs. Jennifer will draw on her legal, tax, and life insurance background and practical experience for today's webinar. And here she is.
Thanks, Amber, and thanks for joining us today. As a reminder, we're going to next month in May, on May 3rd at 11 a.m. Central, we'll be covering the IRS's latest Dirty Dozen list. So mark your calendars for that. As usual, this webinar is free and open to all insurance and financial professionals. So feel free to invite your friends. Before we get started on today's topic, let's go ahead and decide what topic we'll be discussing in June. You've got 3 choices. The first option is the trustee's obligation to ILET beneficiaries. The second option is stranger-owned life insurance gets spicy or Stoli gets spicy. The final option is nuances of death benefit accelerations. I'm going to go ahead and launch the poll and give you guys a little bit of time to vote. All right, it looks like a lot of the votes are in, but I will give you just a few more seconds for anybody who hasn't had the opportunity to go ahead and do it now. All right, it looks like on June 7th at 11 a.m. Central Time, we will be covering nuances of death benefit acceleration. So don't forget to join us for that one. It'll be a really good webinar. Let's go ahead and get started on today's topic, which covers a few practical ways to start the business continuation discussion with your clients. If you paid much attention to some of our past webinars, you will have noticed that we think that business continuation planning is pretty important. It can really make or break a company when an ownership transition occurs. Not to mention that for a lot of business owners, selling or transferring a business can be a large part of their retirement plan. So business transition or business continuation can be pretty important. If a business fails to plan for an unexpected death or ownership transfer, those left behind might become anxious about the business's ability to continue on. Customers may leave, employees may leave, competitors might try to take advantage of a weakened company. Lenders may make demands for immediate payment, and the list goes on and on. Any of those problems can potentially result in the failure of a business, but with good planning, a lot of these problems can be avoided or at least mitigated. So why don't we all work in this market? Probably because it can be really hard. But with good strategy, knowledge base, and a good planning team, your clients can get the help that they need for a successful outcome. There are all kinds of data takers out there, but we here at Advanced Underwriting Consultants have developed our own. Obviously, the objective information is very important for business continuation planning. We think that some of the more subjective information about the business, along with some of those hidden and generally overlooked details, are also very important for the continuation conversation, and our data taker reflects that. I did send the data taker to everybody who was registered about 20 minutes ago. So you should have it in your email. Hopefully you can refer to it. If not, it should be there waiting for you when this is over. I will show the data taker, but having it in your hands is a little bit different than seeing it on the screen. But like I said, we will be referring to it throughout this webinar today. We're going to discuss some of the purpose of the questions that we've included and why we think they're important for the interview process and how to get that discussion started. We'll also go over some of the actual questions on the data taker and discuss why those questions matter. And finally, we'll discuss some of the alternatives to set up and structure a continuation plan, because continuation planning is not one size fits all. Before we get into the data taker questions, we'll discuss some of the general questions that you may want to use to start a discussion and what the purposes of these questions are. While some of these may seem obvious, we're also trying to get the business owner in the right headspace to really have a good, open, honest discussion about continuation planning. So we'll start with these interview questions and their purposes. The first question on our list is the owner really interested in making plans? It's rare, but some owners refuse to even think about their exit plan. If an advisor is working with someone like that, it may be best to move on to your next prospect if there's no coming around for that client. Another question is, who are the other decision makers with regards to plans for the business? Are there other owners or stakeholders whose objectives also need to be taken into account in making these plans? Who are those other owners and stakeholders? Are they family members? Are they key employees? Do any of them have a financial or emotional stake in the survival of the business? Their perspectives may influence the final plan, and they may have a greater influence than what you initially think. What does the business owner want to accomplish and when? Does the business owner plan to retire? When and under what terms? When the owner is ready to sell, how much do they expect to receive for their business and from whom? What risks are not currently being considered? A good continuation plan anticipates many contingencies, including death, disability, divorce of key players, financial setbacks, retirements, and falling out between members of the management team. These things ought to be considered when implementing a plan. What obstacles stand in the way of our goals? Does the business have multiple owners who don't necessarily agree about the business's value? Is there no clear successor business owner? Are there multiple family members who are candidates to run the business, but they don't really get along? These are all important things that we really need to know when trying to formulate a good plan. What kind of plan might be the best fit? What does the owner imagine is the best exit strategy for them? Now we're going to move on to some of the actual questions on the data taker. This is a good time to remind you that if there are more than one business owner, each one should be included in this conversation. And whether you do that with them together or separately is up to you. You can kind of fill them out to determine which is the best solution. It probably makes sense to do both. Have a meeting with them together and then also have meetings with them separately if you can. So some of the questions that you'll find on the data taker are as follows. Tell me about your business. This first question is intentionally open-ended, and it's designed to start the conversation. Will this lead to more information than you need to know? Yeah, probably. But it's best practice to harvest as much information as possible to come up with the best plan possible. Some follow-up questions under this header are about the entity type, the business's history, future plans that the business owner may have for the business, information about key employees, and information about key advisors. We think that this one's particularly important because to have a real seamless plan, a seamless continuation plan, the CPA and the attorney, and if there's a business manager and key employees all need to be on the same page about what's going to happen and when. We think that teamwork makes the dream work for business continuation planning, so we feel like this one is particularly important, getting to know the other people that you may be working with for this. The next question is, tell me about your family. This question is also intentionally open-ended. We're trying to hear about what family, if any, is connected to the business and how. Family connections can run strong through a business, or the business may be viewed as a simple money-making tool. The owner may be anxious to keep the family, the business in the family, or they may just want to get as much money as they possibly can. Either way, it's important to know if family is involved in the business and what that involvement looks like and what they expect for the continued involvement to be. The next question is, tell me about your ideal retirement. What does it look like? Some of us tend to think of business continuation planning as simply buy-sell planning as a way to hedge against an unexpected death. But good planning can also be a retirement tool and should be treated that way. We recommend starting the conversation with the possibility of retirement rather than death. Obviously, the idea of retirement is much more appealing than the idea of death, and we think that continuation planning is can be a really big tool for retirement planning. We want the business owner to imagine what an exit during their lifetime might look like so we can better help them with that. The next question is, tell me about your contingency plans. What will the owner do in the event of death or disability or a disaster? We're trying to gauge what the business owner has in mind versus what, if anything, they actually have in place. Disasters here can be a lot of things. We tend to kind of think about natural disasters, right? But a disaster may be a divorce in the family, or it may be a falling out with management, or it may be supply line issues. So there are all kinds of things that can potentially come up under this category, but they're all good it's all good information to know and to think about when coming up with a plan. Tell me about conversations you have had with key employees is the next question. Does the business owner have plans to rely on key employees? Do those key employees know that the business owner plans on relying on them? Do we have plans in place to keep those key employees around? Do we need extra cash flow for that? A lot of times, this is a step that business owners might overlook. Sometimes they'll just assume that their key person knows that they rely on them and they're going to continue to rely on them at a time of transition. But sometimes those key employees have no idea what the business owner is thinking. So we think that the business owner having direct conversations with key people are one of the best tools for continuation planning and that transition to make it as smooth as possible. So here you're kind of acting a little bit as a coach to help nudge the business owner to have those conversations if they haven't actually had them. This is to help them get thinking about getting those conversations started. That question is. The next question is, tell me about what keeps you up at night. This question is very open-ended, obviously, but it's meant to tease out any worries that haven't been discussed yet. For instance, the owner might not think that the fact that they have a special needs child that they're wanting to plan for is directly related to the business. But when we take a holistic approach to planning and we're looking at everything, those things are very important and they do need to be part of this planning as well. So is the owner worried about planning for that? Are they worried about planning for a divorce? Are they worried about planning for kids from another marriage that's not from their current spouse? This question is meant to kind of tease out any of those things that the business owner might not really be thinking about because they're thinking about a business track kind of mindset and not necessarily about the whole picture for their retirement planning or, the plan for after transition. So we think that this question is very important, and it's one that we need to give our clients plenty of time to be thoughtful about so that we can help them come up with a whole plan. Now I'm throwing up a picture of that data taker. Like I said, I did send it to everybody. I know that seeing it right now on the screen is not as helpful as actually having it in your hand. So I did email it to everybody. Again, if you didn't get it for some reason, you can email us after the fact and we will happily send it to you along with the supporting materials for today. But there it is. That's what it looks like. You can see it's relatively short. We try not to we're going to be taking a whole lot of information with these questions, but we're not trying to overwhelm the client either. We're trying to make it approachable. So that's what we had in mind when we created this data taker. So hopefully it'll be a useful tool for you. After we've gathered all of this information, now what do we do with it? Hopefully you can use it to come up with the best continuation strategy for your client. Continuation can look a lot of different ways depending on your client's needs. As I said earlier, business continuation is not a one-size-fits-all strategy. It might be a buy-sell agreement between the owners. It could be a one-way buy-sell with one or more key employees. It could be a testamentary transfer to one or more family members. It could be a sale of the business now to co-owners or to a family for retirement plan purposes. We also see people who want to make a gift of the business to their family during their lifetime so that they can see their family members be fruitful with this business. And also, they could still be around to give them some advice if they feel like they need it, right? But gifts of the business now to family is also a strategy that we see, fairly often. Installment sales of the business at retirement to help facilitate that retirement income and that kind of thing. That one's also a very popular one. It's also very popular because it doesn't involve the death of the owner. It's a lifetime thing where we get to see the benefits of this during our lifetime. And sometimes it might be as simple as a sale of the business assets at the death or disability of the owner. That one is also a viable option. It just kind of depends on the business and what their assets look like. And, if there's not potentially anybody around that wants to take on the business, this might be a best strategy for that. But hopefully, after all this, we've gathered enough information to help you and your client determine the best strategy. There might be cases where it's a number of these things or a combination of one or two of these things. But hopefully with all of the information that we've gathered throughout this process, we can help determine which one of these is the best fit or which set of these is the best fit for your client. So takeaways from today's webinar are that effective business continuation can be very hard. There are lots of moving parts. There are lots of people potentially involved. There are lots of emotions potentially involved. But we are kind of the mind that taking more information than what you might necessarily need is probably a better strategy to get to the best end result. Another, potential barrier to continuation planning is that these conversations can be very uncomfortable. but the uncomfortable part of it would be exacerbated with a bad plan or with a lack of plan. So sometimes we just have to remind our clients of that although this idea of letting this business go or selling this business may be hard, the alternatives of not having a plan will be much harder potentially. The role of the financial professional is to be a coach and an accountability partner. As I said, we kind of believe in gathering as much objective and subjective information as possible to come up with the best plan. And, you'll use all that information to help come up with a plan. And again, we would highly encourage you to get the other planning professionals and advisors on board and involved with this planning strategy so that you can come up with, what works best for everybody. Again, as I mentioned, I'll mention it one more time. I sent the data taker to everybody. If you didn't get it for some reason, Amber is about to give you information on how to email us to request that. And with that, I will turn it back over to Amber.
Thank you for joining us today. Feel welcome to join us for next month's webinar on May 3rd, where we'll be discussing the IRS's latest Dirty Dozen list. As a reminder, if you would like to receive supporting materials, feel welcome to email us at asktheexpert@advancedunderwriting.com. You may also email questions related to today's webinar. Check out our YouTube channel to view our past webinars. And finally, for more information about the services that Advanced Underwriting Consultants offer, including phone consultation and newsletter licensing, feel welcome to contact us at 615-224-1291. That's 615-224-1291. Thanks again and best wishes for continued success.